Hi, and welcome to Best in Tesla. Today I have the honor to have John Lee, the CEO and Executive Chairman of FLYN Nickel Mining Corporation, on the show. He has more than 20 years experience in the mining industry and has raised more than $130 million for mining explorations. So he knows a lot about the bottleneck of the EV transition, the mining of raw materials. And Tesla is doing things very different compared to the other OEMs. And John really has a lot of knowledge about this field, so I really wanted to pick his brain about what Tesla is doing so differently. What is the difference between physical nickel and paper nickel? And why that is so important? And do we have enough materials for this EV revolution? And what are the challenges? I apologize for my bad video connection. Unfortunately, that didn't show up in my feed, but luckily John is looking good and no problems with the audio. So enjoy the interview. I hope you learn something new. Well, thank you so much for being here, John, and welcome to Best in Tesla.
Good to be on your show, Lars.
Well, you just did a great interview as well with Dylan from Electrified.
Yes, I did.
Where you really got into the weeds about nickel production and the mining process and all that. That was really knowledgeable. So that was really cool. And I will also leave some links to that down below if people want to learn more. But in today's video, I would really like to focus on the different approach that Tesla does with the mining companies and the competition. So because I've also heard you talk about, there are the physical nickel and there are paper nickel. Yes. What is the difference here and why is that so important?
Lars, it used to be the days that, I would say maybe 100 years ago, before the invention or advent of the futures market, most people, they do barter trade. So they bring the cash, they go to the producer, and either it's a mining company or cotton or cows, whatever. You pay the cash, and then the producer give you the goods. However, I think the market has evolved, especially in the last 20 or 30 years, where both the speculators and the consumers, the end users of a commodity such as nickel, they resort to the metals exchange market. So either COMEX or London Metals Exchange, kind of like the stock market as well, to procure their supply. And what happens then is over time, as the supply of money grow, as you know, the price of a stamp back in 1972 was 3 cents or 5 cents, is now 50 cents. The money supply grow, but the amount of metals produced hasn't gone up, or commodity hasn't gone up as much. So you got to a situation today, and it really deserves a bit of explanation so that they put everything in proper context. So you got to a situation today. So for example, nickel, the London Metals Exchange, on a daily basis, back before March, which we're going to talk about, but even as of today, the total amount of contracts changed, the amount of nickel changed on the London Metals Exchange in the trading is around 50,000. It's around 50,000 contracts, and 50,000 times 6, that's 300,000 tons. So it's almost like around 10 to 15% of the total annual nickel consumption. So what's happening is that you have a lot of speculators and investors that are buying and selling contracts without ever the intention of delivering nickel on the sell side. And on the buy side, they were never intended to buy the nickel in the first place. And so that kind of lands to the question you have there is, when somebody is buying nickel, right? What is the purpose? So if you're a speculator investor, you never wanted to that end delivery. You just want a proxy to lever to either make money or to make money on the nickel price. But then for people like Elon, he is really going after the physical nickel. So the interesting fact is that only 20% of the nickel there's a lot of different factors. I just want to lay it out. I just got off from the mine site yesterday. Is that I think the bottom line is Elon understood that the paper market, the exchange market, is only a representative of what the real nickel market is, because majority of the participants were never going to supply the nickel in the first place. The buyer of these contracts in the market were never meant to buy and take the physical delivery in the first place. And then the point about the last point about the London. So for example, then you ask, what is the legitimacy of a London Metals Exchange when 80-90% of, you know, when so many participants never intended to take, I mean, when you know, given say in 2 weeks you have the total turnover in the entire physical nickels market. So what is the legitimacy of that market? Is that there's only around 50 to 100,000 tons of nickel in the warehouse, because there's so I would say maybe a fraction, not even 1% of the volume that's trading on the exchange actually have that the amount of nickel in the warehouse would not satisfy more than 1% of all the paper that's changing hand. So Elon understood that go to the physical market and actually go to the paper market, go to the exchange and start buying nickel contracts and demand delivery. There's simply not enough nickel in the warehouse to deliver the nickel that Elon wants. Of course, Elon can demand delivery because he has the right to do that, as he bought this contract, which is very liquid. Elon can buy all the nickel he wants in a year, within a week, right, on these paper contracts. But he understood that there's not nickel to be delivered, and that's going to cause a short squeeze. Maybe he can get that nickel delivered on the first batch in the first month, but then that nickel price is going to double and triple and quadruple like we saw in March, because there's simply not enough nickel in the warehouse. And then the seller of this contract, of which Elon bought, will face dilemma. The dilemma is either call force majeure, or they have to find nickel somewhere else and pay exorbitant price for that. So instead of going to the exchange market to buy the nickel, so what Elon did, in the short answer is, then he actually went to the old days, 100 years ago, to go directly to the mining companies, right, and say, okay, the two obvious candidates are Indonesia, because they account for around 30% of the total nickel production on an annual basis. So they go to Indonesia. They didn't even go to the individual miner, because they know that Indonesian government is the gatekeeper, as they had imposed various regulations about export quota for nickel, for coal, for a lot of the different commodities. Indonesia is a very big country. It's around 250 million people. So I think it's 150 or 200 million people. It's a lot of people there. So they want to make sure that they have enough domestic supply. So they didn't even go to the miners. I just trying to be quite smart in Indonesia, right? That they go to the government and say, I want that much nickel. And the government will find a way to supply that nickel for him. And but before Indonesia, Elon's first choice was Vale. So he went to Vale, and Vale used to be the world's first largest nickel producer before the invention of the laterite from Indonesia and Philippines the last 10 years. So he also signed a deal with Vale, which is arguably one of the top 3 nickel producers in the world as a mining company, and signed a contract with them. So Elon clearly bypassed that exchange, sort of paper exchange contracts, and then go direct. And he also bypassed a lot of these traders, right? Because the traders are just an intermediary dealing with the miners, the commodity metals exchange, the small miners, or the aggregate of all these sort of landscape. So he bypassed a lot of the traders, and instead it went straight to the likes of Vale, Indonesia. And if I were Tesla, needing 100 million pounds, 200 million pounds of nickel required for his 1 million to 2 million EV productions, that is the way that I would go as well.
Yeah. So is it what Tesla is doing, making these huge contracts with the mining companies? Is this normal for the battery manufacturers, that they make like 5-year contracts? Or are they more short term and waiting to see what the demand is going to be? or are they also making these long contracts? Are they going to be surprised by this big demand there is going to be about nickel?
Well, nickel has been the main use of nickel ores before EV were for alloys, for stainless steel, because nickel is anti-corrosive, it's very ductile. It's got that shining feature, so a lot of your kitchen utensils are made with nickel, and also a lot of the piping for construction is made out of nickel because it's ductile, so you can shape it and it's anti-rust. Today, only around between 5 to, you're looking at 4 million EVs in 2022. That would account for about 6 to 8% of the total nickel demand. So it's by and large, it's not a significant proportion. But because the market is in a state of equilibrium, when you have that new entrant that coming, so that caused, and that's part of the reason in March there's a run up. Your question is is it normal for Elon or for a company to sign a long-term contract with a miner? It hasn't happened a whole lot for nickel because, I mean, if you look at, say, for a stainless steel company, nickel sort of input is around less than 10% or 20% of their total supply chain cost. So it's not a big critical thing. So usually they just call the trader. They don't even bother with valet. They just call the trader and say, okay, next month I want this much nickel, and nickel's going to show up. So nobody really thinking about, my God, 1 or 2 years ago. However, there is precedence in that. Like, for example, uranium, right? Uranium is something that's very strategic. If uranium doesn't show up, your power plant gets shut down. So there is a common practice in uranium of which the nuclear power plant companies would go to the uranium producers like Cameco and Kazakhstan to procure nickel, so to procure uranium on a 5 to 10 year or even 15-year basis, and they will even fix a price on the contract. So I think an example is Cameco, during the sort of peaks and troughs of uranium, some of their prices locked in at $80, $100 a pound when uranium was trading at 20, but yet the purchasers still have to honor the contract. As to the content or the structure of these contracts that Elon has with Indonesia or Vale, it really boils down to, I would say, the three major factors: the price, and the quantity, and the duration. So, in some contract, 5 and 10 years, even though it's not usual for the nickel market, I think it's unprecedented. Nobody's ever done this before for nickel, but it's not unusual for the market like coal, for example, in Europe, even though thermal coal is at $400 a ton right now. But a lot of the utility companies had a fixed contract. Usually for coal, it's around a year. So they're right now still paying for about $100 to $200, and they're in the midst of negotiating for the year of 2020. In 2022, they're negotiating for price for 2023. That's why you might be still in for a sticker shock for utilities, because a lot of the price is still based on the coal price in 2021, which is around 50 to 150. Now, I think talk about duration, 5 to 10 years. That's a reasonable number for Elon, because he has a forecast as to how many cars he's going to produce in the next 3 to 5 years. So has a pretty good idea of how much nickel is going to buy, and quantity as well. I mean, that would be. I mean, interestingly, he went to Vale, Indonesia, signed this contract. I think usually for a miner, you probably will not develop or dedicate more than or allocate more than 10 or maximum 20% of your output to one particular buyer, just in case there's any particular issue that you're not sort of writing on that specific buyer. And then on the third is on the price. This is where things get a little bit tricky. On the quantity, I'm sure Elon already fixed the price with especially like a Vale. In government, it's a little more difficult because the government actually doesn't produce nickel per se. But in the case of Vale, they will most likely have settle on a quantity on an annual basis. So in that scenario, Vale is committed to deliver that much nickel, and Elon is committed to buy that much nickel. So it's called the take or pay contract. Even if you don't need that much nickel, you still have to buy that much nickel. And if Vale doesn't produce that much nickel, then Vale has to find a way to get that nickel. It's kind of like an airline. If you have a ticket, you get a seat. Now the question is to the pricing. That is where things get a little bit unclear. Usually, even in a contract, a long-term contract, in where parties fix on the quantity and the duration, whether it's 1 or 3 year out, 5 year out, it was still based on the spot market, which in the case of nickel, it would be London Metals Exchange. In the case of gold, for example, it'll be COMEX or London Bullion Exchange, LME. And in the case of thermal coal, then it'll be Newcastle thermal coal price. So in the case of, but then I'm sure Elon probably wouldn't want to do that, because the whole reason he wants a long-term contract is, first of all, to secure that nickel supply that he needed, and secondly is to not have to is to minimize that price volatility, because he already openly said 2 years ago that you want to guys to mine as much nickel as possible. So my bet is he probably wouldn't want to be benchmarking against the spot price, because then he get the supply, but he can make pay an arm and a leg. So most likely he will pay, he will what they call the hedge. So if you look at the London Metals Exchange, there are actually prices that going out a year, 2 year, or 3 years out. Usually it's called the contango. So it's a slight premium to what the spot is trading. And I had just looked it up. I think right now nickel's around 950. There's not a whole lot of premium on LME for 2023, 24, 25 at around 5 to 10% markup. So that contango is not a whole lot. However, like the Vale might not be willing to commit just because LME says that. Vale might not be willing to commit and sell that volume. The volume may not be a whole lot. So I was probably, my educated guess would be probably some fixed price at a premium, and then maybe also some that are benchmarking on the spot, or maybe there's also a possibility of some sort of fixed formula, so that Vale has the downside protected and has the upside capped. So there's actually a lot of different. You can be quite creative. So I mean, Elon can say, I'm not gonna. I will pay minimum $10. So even if the LME go beneath $10, he'll pay. But Elon can say, well, if I were to trade that with you, Vale, then on the upside, when it goes over 20, then every dollar goes above 20, I'm only going to pay 20 cents on that. I think given that also BHP and Vale, they see the future of nickel. They know a lot of people are knocking on the door. It's very unlikely that Vale is going to give them a fixed pricing contract at even a 5% to 10% premium. Most likely, there's going to be a base price, and with some sort of escalation. Maybe not to the extent of 100% exposure to the LME price, but will be a percentage of that. Hopefully, it answers the question.
Yeah, definitely. And when Tesla's been doing this for many years, getting these huge big deals in house. But Tesla is not making their own batteries at volume yet, but they want to do. Right. But is this for themselves, or is this also Tesla actually going to be a supplier of these materials to the battery suppliers that are going to make batteries for Tesla? Or how do you think this is going to work out? What is the deal with making all these mining deals when you're not making the batteries?
Elon is going to splash his cash, right? He buy things that he like Twitter. So my educated guess again, he's going after all the nickel that Tesla will ever need for the next 5 years. Once he secured that nickel, well, he's in a good position, right? First of all, his priority is obviously to feed the factories, his own factories that produce these batteries. But in case LG or Panasonic or everybody else happen to need nickel, and Elon can make a buck out of it, and then also to make sure that his contracts with these battery manufacturers can be secured, then why not? I think he's happy to actually have excess inventory of nickel, to help out on his then to be on the short end of the stick. Keep in mind also, I think I was mentioning to Dylan earlier, a lot of these traders or battery manufacturers that are counterparties to Tesla. You can, again, building these contracts, and I've seen these offtake contracts, on a force majeure. The contract may say, okay, with the force majeure, we have to supply the nickel regardless, or the monetary equivalent of the nickel that was supposed to deliver. Well, it's no use for Elon to get a check, right, for 5 million pounds of nickel and then pay 50 million. And then Elon's loss is magnitudes higher than that. And then when nickel prices are so volatile on a daily basis, like for example, in the metals exchange, within a week, nickel price went from $10 to $50. So if LG were to declare force majeure to violate the contract, couldn't come up with the batteries, then, or the nickel we needed, like, how are you going to assess the damage? Are they going to say, well, okay, a battery is $2,500 or $7,000, and then that's $7,000. I'm gonna write a check to Elon Musk and call it a day. You can clearly see that there is a lot of legal ramifications, entanglement. That the monitor, when you go to court, Elon can make a case of adding 3 zeros, right, to the loss. Then you can calculate the loss on the market cap based on price earning ratios, and you're talking all of a sudden not like $100-200 million contract, but tens of billions of dollars of potential loss to Tesla. And that is exactly what Elon is trying to avoid, to having a shutdown on his own supply chain, just because there's not enough nickel to go to a battery, there's not enough batteries to go to his car, then everything gets shut down. And that will be just catastrophic, indescribable. And I don't think that the battery manufacturers or the nickel supplier to the battery manufacturers understood these ramifications, because something that magnitude has never happened before. So I don't think that went that far. However, like Nassim Taleb's book, Black Swan, right? There's always that possibility. And I don't think this remote, like 0.1% or 2%. So in a way, Elon is almost like buying an insurance policy. However, he's not really paying any premium, given that he's so bullish on nickel. There's always a way for him to find an exit of any excess nickel that he ever has to come up with.
Yeah. So when someone like GM suddenly goes from having a target of 200,000 EVs in mid-decade, and now it's 2 million only within a couple of years span that changed that, and they're just going straight for the batteries manufacturer, that you don't say that it's not usual for them to make a 5-year or longer contract for nickel, because they're kind of waiting for the demand to show. I think it sounds like
that speaks to a lot. It speaks to a lot about the roadmap.
Sorry?
I said that speaks a lot to their vision and their roadmap. I mean, they literally it kind of goes like this, because we talked to a number of auto manufacturers. So they look at, here's how they think. They look at their annual auto production. So for Toyota or Honda, it may be 10 million or 7 million units. I don't know what the numbers for GM is. I know total consumption, total world auto is about 100 million. Tesla is about 1 million a year. So I have to imagine the GMs and the Fords are doing anything from 5 to 15 million cars a year. So basically what they're doing is this, okay? They're like, okay, I have Mustang, right? So that's electrified Mustang. So how many Mustangs are there I produce a year? And then they go to Hummer. They goes, okay, I'm doing this much Hummer a year. And on a linear progression, if I were to go start 10% Hummer in EV and 20%, and then phase in the EVs and phase out the fossil. So they're doing the exercise. It's kind of like analysts, right? Basically replacing their projection with their total sales, and then they just sort of substitute that, and then they just pack in that EV growth curve. And that's how they come up with this 1 million or 2 million. I don't think it's based on any solid mathematics on demand of their current EV sales to their customers. And so that is their part. But nonetheless, if you talk about going from nothing to, say, 1 million car a year, or just say GM's target, let's take an example, say 2 million cars a year. And then just for the sake of simplicity, let's just say out of 2 million, 1 million is MNC, and then the other 1 million is LFP, which is lithium, which is phosphate, iron phosphate, and that is a required nickel. So out of 2 million car, say 1 million is nickel batteries. 1 million car, depending on the size of the car, a Hummer would take twice as much nickel as, say, a Chevy Bolt. But just say, 100 pounds per 100 pounds nickel, which will be about 70 to 80 kilowatt hour battery, then a million EV, or 2 million EV, or a million nickel EV, battery powered EVs, will be 100 million pounds. 100 million pounds out of 5 million would be about 2% of the total nickel supply today, or it'll be equivalent of about a quarter of Vale's production. So Vale account for something around 10%, just less than 10% of the total global production. So if GM would go and say, I want a million nickel powered battery EV a year, I want to buy nickel from you, that would be about a quarter of Vale's production. So, and I think that's probably as much as Vale would could ever possibly give to one single new buyer. Because I mean, if you look at Vale, they have probably, I would say probably 60 to 70% of the customers are long-term customers, of which they don't really want to burn their bridges. I mean, these like Mitsui, that have a board seat on Vale's board of directors, and so they do have this traditional relationship. Even if they didn't have a long-term contract, they would still, right? They would still say, you know what, these guys are VIPs, you cannot touch. So for that, I'm just guessing again, Vale will probably already have 50 to 60% of that locked up already, which means that the only spare capacity Vale can come up with, and Vale is a top 5 in the world, outside of Norilsk in Russia and Indonesia and the Philippines. So all Vale can give is around maximum 2 million. I'm just talking cars. I think it's easier for everybody here to digest. Yeah. Maximum per year, 2 million, no more. And that is like the absolute last drop of available nickel out of Vale, like every single drop out of that. And I'm guessing that Elon probably already take that amount, half of that already gone. And I think Vale already kind of maxed out. I can share a bit of interest. Well, it's quite a bit of confidential. I cannot share, but we know the inner workings of Vale quite well, and I can only say that Vale is scrambling to find additional feed to go into the smelters, and we can go into the demand dynamics of nickel sulphide versus nickel laterite. But the bottleneck I just want to share with is it's not the processing capacity to refine nickel, but rather is to get the nickel out of the ground, because all the nickel, and I'm talking nickel sulphide, which is cleaner form of nickel, and the nickel laterite is having also different set of problems, which we can also go into. But my point is the issue is not with the capacity to produce nickel from nickel sulphide, but there's not enough feed. And from what we're hearing is Vale is scrambling to find more feed so that they can feed their plants to produce more nickel. And that's telling me that all available nickel that Vale produces probably already being allocated. If you talk about 1 million Teslas, you need about 100 million pounds. As I mentioned, that would be 25% of Vale's production. I think that's probably as much as that Vale could offer.
Yeah. So another bottleneck for this entire switch to EVs is also opening mines, and some that is taking a long time because of all the permits you need to open a mine. But we can see like both Ford and Rivian is now trying to push the government, the US government, to lessen the permits or make it easier for people to get a permit. If we take like the government out of the picture and say they will make it better down the road, how fast is it? Find the deposit of nickel, how fast can you, from when you find it to actually have a working mine to get this ore out of the ground? How fast is that actually, that process?
From the point of discovery, so let's forget about prospecting. Just suppose that you struck luck and you find a nickel in the middle of nowhere. Well, first thing you have to do, you have to drill, okay? So a drill hole is around, you can go anywhere from 100 meters to 500 meters. If you drill a 500-meter hole, which is not unusual for nickel, a 500-meter hole would be about a 200-floor building. So you can imagine having drill hole go down from the ground to 200 floors deep, and you have to drill probably about 100 of those. So drilling is going to cost you something around $30 to $50 million to make a bona fide deposit. And that's going to take you probably, 3 to 5 years, depending on your deposit is seasonal. So if you're in the Yukon or in the swamps, there are only certain times, or if you're the monsoon season in Brazil, you cannot drill. So it's going to take about 2 to 3 years to drill, assuming that you know where to drill and where things are. Then you have to do the technical study to figure out how the mine is going to be built, how it's going to be processed. Then you have to go through 2 years of permitting. And that is when you say permitting, why is it taking so long? People want to know how much noise you generate, how much carbon, how much air, how much stuff you come out. How do you extract the nickel? How many power you use? How much water you use? And how is the project gonna affect the local habitats? And this will be horses or birds, cows, and sage grouse, bats. And the water, if you're doing water and if there's discharge of water, how does it affect the equilibrium of the water quality? And again, a lot of that is seasonal. You have to do it 1 season or 2 seasons to see how it affects the water table. So there's a lot of science that goes into this. All in all, I would say if you were to make a discovery today, and then you're going to start building the mine, and building a mine, and taking a building is 2 years. So the minimum time is 2 years. I would say on the safe side is 10 years, but even if you accelerate it, it's going to be 7 years. The fortunate thing though is there are and so they say the best place to make a discovery is to go from where prior discoveries are made. So there are a few very well established nickel camps in North America, and there's a Duluth complex in Minnesota, and there's Sudbury, and there's Thompson and Voisey's Bay. So there are pockets of places where I think there is quite a bit of resource, but even there's resources still need to get permitting to get the process moving. And just real quick note about permitting: the government's hands are somewhat tied to this permitting process. You cannot just say let's discard it. And that's the analogy that I use is like a refrigerator, because you have over a century of mines that have been commissioned and opened. And especially in the years prior, people had less regard for environmental preservation. So there's a lot of lawsuits or a lot of things that happen in accidents. So what happened then is a company like FLYN Nickel, when we commission a new mine, it's almost like we have to proactively document and say, we're not this, we're not that. Because otherwise, this is going to shorten the cycle. Because the government or environmentalists, they're going to write a letter, say, we are this X project that had caused this accident, and we're that, and so in a way, we're doing proactive, what they call the risk mitigation, in actually documenting on the decisions of which we made a certain mine this way or certain plant that way. And the reason we make this decision is we didn't choose it the other way because the other way kind of didn't work before. So you kind of, and then the only way to do, so that's why the volume of these permits grow to thousands, not tens of thousands of pages. Unfortunately, because there's all these legal precedents is to reduce the mitigation. And the government has to go through that, because otherwise the government could be a defendant from a suit. So everybody has to sort of get the checks and the balances through. So I don't see how the government can I don't think there's so much that could be done. Therefore, on the other side of the coin is, even if nickel price were to double or triple, you're not going to all of a sudden see new nickel supply coming on stream. No. I don't think there's any project that's going to significantly change the landscape for nickel in the next 5 years, especially for nickel sulphide. Nickel laterite is a little different story, but I would talk about nickel laterite. In short, the carbon intensity, the carbon emission per unit of nickel mined from a laterite deposit is up to 100 times more than the nickel sulphide deposit. And I think we go to other nuances, and you can refer to Dylan's interview where I expanded at depth about how the differences are, which also means that Elon, when Elon struck a deal, within a couple of weeks, you have Elon received letters from environmentalists that are complaining about and asked Elon to not buy nickel from Indonesia. My guess, after some thought, is that I don't think Elon is going to use the nickel from Indonesia to put into his batteries, but rather he would swap his laterite nickel maybe with guys in China that have lesser concern, or with the stainless spoon producers or piping producers. So he might pay extra $1 or $2 per pound for nickel, but if he had hedged right on a fixed pricing with the Indonesian government, then at least he wouldn't pay an arm and a leg for that nickel at much higher price down the road. If that makes any sense.
Yeah, definitely. So, if you should guess, if we say that the EV adoption is going maybe not as fast as some people say, but not as slow as other people say, so like 2035 we will have almost 100% EV adoption, and these hundreds of millions of new cars sold, that is EVs, and half of them is nickel with nickel batteries. But do you think that the supply will keep up with the production? Because that's also, people, the OEMs are trying to ramp up the production of EVs, and it's not going that fast. And Tesla is really, really fast. But do you think that the supplier for raw material will meet that production rate of EVs if the 100% is in 2030, or is that too fast, or where do you see that problem there?
Well, if we dissect the different sort of forecasts, I think first of all, California just came out and say that the state of California is not gonna sell anymore ICEs, internal combustion engine cars, I think 2030 or 2035. Australia came out and said that they're not, the banks in Australia are not going to finance any new ICE car purchases anymore. And so, this is not just, I think 3 years ago people say, oh, you're loony, right?
Yeah.
It's entirely, I think now it's quite clear, it's entirely realistic that EV can make up 50% of all the auto sales in the world. I think that is I don't think that is a stretch of imagination. However, though, I think, Lars, the question then is, once you have, say, autopilot, would the world still need about 100 million cars? I think that's left to be discussed, because the current utilization for a car is at around 10 to 15 to 20%. That's all. So any given point in time, 80% of the cars are sitting in the garage somewhere. So I'm a little doubtful as to, by 2030, are you going to still churn 100 million autos out there? And then you look at the world population, like in Taiwan, shrunk 2% from the year prior. So then, at this rate, at 2030, you're going to have, 2/3 or 75% of the population. Last but not least, related to nickel, before we go into that question, to your answer to your question is, recycling is not it's not a big contributor or factor right now, but 10 years from now, you'd be looking at something around 4 million times 10. You're looking at 50 to 100 million used EVs out there, and so that recycling of the nickel batteries, which is actually a lot higher grade than nickel out of the ground, because the nickel out of the ground, a ton, which is 1,000 kilos. You will get maybe at most 10 kilos of nickel, right? So nickel batteries has much higher nickel content to recycle for nickel. So it's just different technology. So I think, let's just pick a number. Let's just say, let's stick with your analogy, 100 million EVs, 50 million is battery powered. So you need 50 million nickel batteries. And is there enough nickel to go around? Well, 50 million batteries at 100 pounds per battery will be 5 billion pounds. And that is exactly what the nickel production is in 2021.
Okay. So that would be all the nickel.
No. The answer is no. The 2021 production was 4% less than it was in 2020. And as I said, you're not going to see a significant blip on nickel production either way, regardless of what the nickel price is. And the likely scenario would be, well, I think so. Then first of all, you have to do more LFPs. And that's why I think LFP in a way is actually saving the day for nickel to slow down the substitute research, right? And because people are sort of on the frenzy, then we're going to try to look for alternative more. And I think that's why Elon looked for nickel 5 years out, because nobody really knows what's going to happen 5 years from now. And just looking at the pace of how even nickel battery itself advanced so much, then likely there's going to be some other technology. But I can't speak for that. However, if you look at, say, I mean, modestly reduce the number by half, or if LFP account for 80%, and then the nickel battery cars for 20%. So if you get 20 million cars out of 20 million instead of 50 million, then you're looking at around 2 billion pounds, which is approximately 40% of the current nickel supply. I think that is something that's more, well, that would be around 7% to 40%, 7 times more. But however, I think that supply would not come from new mines, but rather will come from substitution. What that means is, you know, your fork might not be as shiny as it was before. Then they might look for other alternatives. I'm not an expert in that. I'm yet to research this. I'm talking to more people like you and get my sort of thinking going. There's chromium. There's other things they put on the table that could potentially substitute nickel, especially if nickel were to do a major run out. And this substitution is quite common. I think a good example would be vanadium and niobium, and it's for strengthening reagent for rebar. So when vanadium went up, then niobium would be niobium coming for substitute, or palladium and platinum in the autocatalyst realm. That's also a good example. So I think chromium and chromium is around, I just looked up, around 10 times more, about 15 times more production than nickel. So there are some substitution that could take place. A realistic scenario would be, I think a realistic scenario would be nickel goes up to maybe 10, double or triple to $20, $30 a pound from current $10 a pound. And that's gonna drive away probably, again, an educated guess, I mean, a wild guess, not an educated guess, around 20 to 30% of the traditional nickel people is going to find other substitute to make room for the EVs. I think that is a likely scenario. 20 million cars, I think 20 million is a stretch, but I think, you know, something around 20 to 30% of the nickel market for EVs sounds like a 20/80 rule, a possibility to reach that sort of harmony, balance.
Because I also think that Vale actually said that they were right now about 5% of their nickel production went to the EV market, but they were aiming for 30 to 40% down the road. So do you think that is just by choosing where the nickel go, or do they have plans to expand like that?
No, I think I'm glad to hear that, because that's going to validate my wild guess. The reason is 60 to 70% of their customers cannot be touched. They are the traditional bread and butter. There's a legacy relationship. They have to reserve that room, which means that there is around 20 to 30% of Vale's future production that may be available. And they still would have to piss off a lot of people to substitute, because Vale's production, I looked up, from 2021 production went down 25% from 2020. So the Vale's nickel production has been steadily on the decline. Actually, in the last couple of years, went down quite a lot, because those nickel mines, especially underground project, if you don't invest in infrastructure, it's almost like a funnel, right? You kind of cap yourself in, and then if you don't sort of plan from the ground up, then your production is going to shrink exponentially as the time goes on. And that is what happened in Vale now. And Vale is not going to be able to expand more nickel production in the future, especially for nickel sulphide. So what they're doing now is exactly as I've said, is they're reallocating their quota. So they're calling some people and say, you know what, you should do some contingency planning, piping producers. You know, I'm not going to be able to give you when you call me next time, and you gotta bugger off. And they give a number No, they're doing about close to 400 million pounds a year or 350 million pounds a year. And Elon, if you want to make 1 million nickel cars, he need 100 million pounds, which is approximately 25%. And not exactly the number you talked about Vale dedicating 35 to 40%. So I believe that Vale is already maxed out. I don't think that Vale can entertain any more EV, which makes the dilemma for GM so much more delicate because Vale is gone. He cannot go to Noral. They cannot go to Norilsk, which is a major nickel sulphide producer. He cannot go to China, which is Jinchuan. That's another major mega one. And it's a Pandora. I don't know where they're getting their nickel from. But Vale tapped out. Vale is tapped out. Yes.
Okay.
BHP likely tapped out. BHP just tried to make a $5 billion takeover of OZ Minerals. They were bidding for a project in Canada for a nickel project that would take about 7 years to go into production. So I'm pretty sure that in the case of BHP, they don't produce as much nickel as Vale, and they still have to cater to their existing maybe 60 or 50, at least half of their nickel is spoken for, which means that they only have a limited amount. So I would say in the case of BHP, they wouldn't even have a million car worth of nickel available. Which then, where do they go? I don't know. Tough question. Then you have the Volkswagen. Then you have the Ford. We're in for an interesting ride ahead. Ross, we can talk about technical trends for nickel, which is broke out, is resting on major support. And I think the upside for nickel is a lot more than looking down. Yeah.
So what we saw in March with the big price jump in the price of nickel, you expect to see that again?
Nobody, I can't see the future, but I want to elaborate a bit because remember we talked about earlier that part of the reason for the run up is to do with speculators because they are so accustomed to making a lot of money, tens of billions in the last 15 years, buying nickel at $5 on paper and then selling at $10 and then doing it again and again and again and again and again and again. So at that time in 2022, 6 months ago, when nickel broke out at $10, they double up on the short side, and then they had to cover, and then the whole hell broke loose. Reportedly, actually, the largest Chinese producer of nickel out of laterite, Indonesia, reportedly short billions of dollars of nickel. Unfortunately, he cannot deliver that laterite nickel into the LME because it's not pure enough. So he was just doing financial hedging because he thought like, I'm covered, right? Because if nickel price go up, I will sell my nickel in Indonesia, make a good profit, and I'm just hedging. I'm sure my nickel is as a paper instrument, financial instrument. But never did he ever imagine that nickel went that high. My guess is that you're not going to see the same ferocity, the same sort of crazy action because the speculator this time, they understood like, oh, I need to be like, I cannot short anymore, right? And also there are rules put in place, like the LME can implement quotas and positional limits. If you're not a legitimate bona fide user or producer, then you cannot exceed a number of contracts. So they can have better enforcement. My view on that is that gradually, even though people know that they don't go to the LME for physical supply because there's not enough out there, and as soon as you start bidding LME, you're shooting yourself in the foot because 80% of the contracts are off market, and then that are all benched based on the LME price, a lot of them. So the last thing you want to do as a major nickel user is to go to the LME and raid their warehouse. Because if you do that, everybody saw, then all the speculator, everybody's gonna pile on, and then you're gonna see the action. So they try to, everybody on the user side, on the demand side, well, the miners will love that, so the miners would mine, but the users, the smart users, and they're all pretty sophisticated, will try to avoid go to the LME as much as possible. However, there's always going to be circumstances where it's unavoidable, and he absolutely need that nickel tomorrow. Right, for otherwise he's in a big legal problem. So you're gonna see that sort of tapping into that box of chocolates very reluctantly, but necessarily. So that you're gonna see. Therefore, I think what I expect is that gradual ascent of the nickel price, mostly driven by LME as the benchmark, but then also that as the physical market started changing and prices going up, it's also not unusual to see off exchange physical trading at a premium to the LME. So at times maybe they actually try to bring down the price on the LME on the London Metals Exchange, but the actual physical market is trading at a premium, and there's certainly a lot of examples of that. In the end, I think looking at some of the markets that had a similar situation before, like cobalt and palladium, where the physical markets have overwhelmed the equilibrium on the paper market, then you're going to see more sort of a steady ascend from the physical shortage, and usually that would take about 6 months to 18 months, and the magnitude is usually anywhere from 200% to 500%. So you looked at palladium went from $800 an ounce in March 2018 to early 2000, went to 2,800. So that was about fourfold increase. If you look at cobalt, that's the earlier sort of nickel story for batteries. 2008, cobalt was at 8, it went to 40. That's a fivefold increase over a year period. I think it would be more like akin to palladium because it's a little bigger market than cobalt for the nickel market. And now I think it's a great sort of bottom floor entry point. You still got a bit of a fallout of the economy, but I think once the EV pace pick up again, and then the market settle down a bit on the equity market, you're going to see that gradual ascent, and then that curve is going to steepen up towards the end. My personal guess, and you can obviously you have this YouTube as a record, is once that thing gets started, you're going to see 12, 15. After you pass 20 a pound, 20,000 a pound, I think that curve is going to start to steepen. Because after 20, it's never the nickel market is never seen over $20 for any extended period of time. So they got in this uncharted territory where people are a little uncertain. There's not an established market for that. And my guess is you're going to settle at around $30 to $50 a pound in the nickel market. That is when the substitute happened. When that nickel battery demand account for a quarter of the nickel supply market. And then you got the spoon makers got driven out or finding their own substitute and around $30, $40. And keep that in mind, a cart's got about 100 pounds of batteries going in there. So whether nickel's at $10, the difference between nickel at $10 and $30, you're looking at $2,000 of difference on that ingredient goes into nickel. I mean, it is not insignificant. I mean, it's a punch in the stomach, but it's not intolerable. I mean, that is like the option of a carbon trim, right, on your door handle for Lamborghini. So, I mean, you're not gonna, which also means that you're not gonna put a nickel battery on a Chevy Volt, but you know, for your Porsche and for your Lamborghinis and for your high-end Lexus and the Cybertruck that needs that surge of power and acceleration. That is, and also because of that, then you're also going to see not so much nickel-based cars out there. So my guess is something around 10 to 20, something around 10 million, maybe 10, maximum 20 million nickel cars, and of that would then account for around 20% of the nickel demand market at a price something around $30 to $40. We're going to see in 3 to 5 years from now how far I'm off. I don't think I'm going to be far off. I'm talking to you. What do you think, Lars?
I'm not going to guess on that one. But it makes sense also that, you know, if it only increases like $2,000, you pay, you know, $55,000 for a Tesla Model 3 or something like that. If it costs $57,000, I don't think that's going to scare off a lot of people anyway. So
a special pin, like if your metallic pin is $6,000, right? A logo is like $600, huh?
Exactly.
The caliper of your brakes is like $2,000. So anyway, putting into perspective.
So we're seeing this bump in the price right now with batteries because of all these materials is rising in price. But we have seen the battery price come down from way over $1,000 per kilowatt hours for the batteries in the electric vehicles to close to $100.
Right.
Yes. So do you see this trend continue over the next 8 years, or are we at a stagnation, or how long will this bump be where the materials cost make the batteries more expensive right now? Or in 2030, will the battery cell be cheaper, or will it be more expensive than they are today?
Yeah, I study quite a bit about renewable batteries because we're also exploring a sister company for vanadium. So we track the cost of kilowatt hour quite closely. Another analogy is the cost of solar power. It used to be 20 cents a kilowatt hour. Now you're at 3.5 cents a kilowatt hour. Another example is the amount of silver that goes into solar panel. I think used to be 10, 15 ounces. And now you can get a big solar panel for less than 5 ounces into a solar panel. I don't study lithium batteries as well, but I mean, you're already at sub 100 kilowatt hour, right? So you're pretty much at the point where the components of the cost of these elements, ingredients that make the battery, account for majority of the cost. And I don't think you can get down much more. I mean, certainly not the scale of went from 1,000 back to. Or another perfect example would be your LCD television, your television. I'm just looking at. I was because my TV is over more than 10 years old, and I went out shopping and I said, "Holy cow! You can get a 60-inch LCD for $1,500." I mean, it used to cost $10,000 for that size. You remember back in the days 10 years ago? Yeah. You're not gonna get like $30 kilowatt hour. It's just not mathematically impossible. So I think we'll pretty much reach that equilibrium point. I don't think the cost of lithium is going to go up because that is one major component. That is the storage, right? The energy storage of lithium. There's a lot of lithium reserves out there, and I would say you'd be lucky to be packing at about 80 to 120. But I don't know all the nitty-gritties go to lithium, but I know, for example, vanadium batteries, something around 60% of the cost is in the vanadium. So I mean, where are you going to go? And then you look at the batteries are made out of casings made in steel, and the cathodes are nickel and manganese and cobalt, and there's not a lot of slacks of which you can sort of optimize and try to cut off. So my guess, again, uneducated, I don't think you're going to get down below 75. If anything, the cost might start to creep up over time because of the different elements and metals in there. Are rising over time, and that's just simply a function of the cost of production going up.
Okay, so if we take recycling into the whole thing, as you say, do you think this big mining boom is kind of like the gold rush that right now and the next maybe 50 years, or whenever we get this closed loop of recycling of materials, do you think the mining companies are going to scale down again, and then the material is going to be less expensive because we have them in this closed loop, or is that not how it works?
Well, talk about recycling. If you look at metals out of the ground, for every 10 kilos of nickel in the ore, you may be lucky to get around 7 kilos out of 10. That's called the recovery. There's a 70% recovery is pretty decent. So how much nickel can you recycle out of a nickel battery? I don't know the answer, but I think you'd be quite lucky to get something around 70% as a rule of thumb, 80% at best. And then you have to extrapolate on how many, like right now, 4 million cars over 10 years, 40 million. And then if you factor into recovery of 70%, so you're looking at 30 million worth of, but then the cars sold, you can only really recycle cars more than 5 years old. So at 2030, you're going to get around 15 million cars worth of nickel, right? You got nickel worth about 15 million at most. So that's not even that's not even a quarter of 1 year worth of nickel production. So I think it's going to be a steady state, accounting for nickel around 10 to 20%. Just like recycling of silver and recycling of copper out of wires, etc. It always will play a part. But it also is that 10 to 20% of the element that will come from recycling. So I don't think it's critical part. And secondly, Lars, I was just at our mine in Manitoba, and people are getting really educated on the local community. There's called the internet, and people can research, and So it's going to take quite a bit longer than before to permit a mine, especially in jurisdictions and locations there hasn't been a mine that's been commissioned before. I don't see as, again, it's like I said, that higher price is going to then bring on additional streams of nickel onto the market. And I don't think there's also a meaningful amount of stockpile that's being available right now. We don't really know, but it's not like gold and silver where you have centuries of, once it comes through, nickel's gone. You're not gonna like destroy the building to get a pipe out of it. But whereas jewelry is a lot more easy to recycle. There's a question being asked me, which is I thought was interesting, is would the miners purposely slow down their expansion to try to squeeze as much as nickel as possible? I give them that question a little bit of thought, and the answer is it really depends on the CEO and the board of director of a mining company. Some people are so like, for example, even today, okay, so there's different guys at different points of view. Some want to expand, some want to shrink, and have a different points of view, just like you and I have. And so if a CEO is bearish on the nickel price, then he's not going to expand, right? He's just gonna only mine the highest grade, the lowest cost areas of production. He's going to squeeze that margin. And if the company is more like traditional, steady, kind of like a dividend paying and just steady, then if nickel price doubles, then he only need to come up with half as much nickel to come up with his same bottom line. So there's not a lot of incentive for more conservative companies that sort of to expand. But then if you got like a Robert FLYN or Elon Musk control company that go hyper mode, and then then the picture will be different. Also going into, so I don't think it's like a collective answer to that question. Really will depend on the individual company. However, having said that, the likes of BHP, largest mining producers in the world, BHP, Vale, Glencore, which was through the merger with Xstrata. They have a footprint in Sudbury. And these companies are very sophisticated. They see the buy side, they see the sell side. And my guess is they will try to bring on, and I think BHP already showed its hands in buying all these assets, trying to take over because they see the bullishness of nickel. So I am pretty confident of my call of at least $20 nickel, 3 to 5 years by 2025. And that pace is just going to pick up quite quickly. Once it's almost like a game, right? It's kind of like you're playing Fortnite, whatever. You set the stage, you get the pieces you ready, and then you put the play in motion. And also a little bit like musical chair, everybody is sort of dancing and having a good time. Everybody's got a paper nickel contract, but when push comes to the shove, the music stops, and everybody taking their seat, and unfortunately, it's going to be like the Shanghai Copper Exchange, where all of a sudden one day they found that they're short of hundreds of billions of dollars of copper short. What happened? Well, somebody double counted their paper contract, and one guy took delivery. Right? That's when the music stops. Unfortunately, I think in this case, it's not the game like when you're playing as a child where there's 10 chairs and there's 11 guys. I think in this circumstance, you're going to have probably 10 guys with only 3 chairs. So in the end, 7 guys in the end. I'm pretty sure that's going to be the case because you can count. You can do the math. BHP is completely committed. Vale is committed. All the laterite guys and the battery people don't really want. So like it befundles me as to where the nickel is going to come from. It really is a big question mark to me.
Yeah. All right. So last question, John. Are Tesla going to get into mining, or don't you think that is something they have to, or where do you?
I think that's a distinct possibility. I mean, first of all, Elon's had the foresight of not relying on the battery manufacturers to come out with the nickel because he knows that if nickel doesn't show up at the battery is not going to show up at his door, and the hell is going to break loose. Doesn't matter what contract, the hell's going to break loose. And he's already signed a contract with Vale for offtake. He's signed a contract with also with consortium in Madagascar with Trafigura. He signed a contract with the Indonesia government. I would say probably he's got 5 years worth under his belt, looking at just the analysis that we have run through. And then the question is, he also looked into a couple of miners with rumors like Talon in Minnesota. I think it's a bit of a basket case. They're quite a years away from production. When you say getting into mining, then there's a question, right? Are you getting into a conglomerate, like a big mining company, and that will cost you tens of billions of dollars to buy? And they also have some other associated, like Valley also mine iron ore. They also mine copper. They have different jurisdictions. So it's pretty complex issue to have to deal with. And then if you were to buy a pre-production stage company such as FLYN Nickel, for example, then Elon doesn't have the know-how. He doesn't know the environmental side. He doesn't know the legal side. He doesn't know the technical side of the equation. So most likely, if he doesn't get the nickel that he wants, he may buy an equity position, say in Vale, and that's quite common. Like I said, Mitsui has equity position in Vale to try to sort of get themselves in on secure their offtake. So if Elon's not getting what he wanted on the quota from Vale and from the BHPs, and he still couldn't get enough nickel out of all the available miners out there, then he will then have to buy a deposit and mine it, right? But that will probably be the last resort, because if you buy something today, pre-production stage, that's not quite fully permitted, and none of them is really quite fully permitted right now that I'm aware of, then it's going to take you 5 years. So I think right now, just say, okay, let's just get the guys that are ready to get the nickel out of the ground, is getting nickel out of the ground right now. Let's get these guys in first. So I think he's done with that, and he's okay with the next 5 years from Vale and Indonesia and Madagascar. And then if there's no substitute, a new technology, 2 or 3 years from now, I would not be surprised if you don't go after one of these deposits, what they call the deposit discoveries, of which then you have to get that stuff out of the ground, or have some sort of joint venture where Elon provide the capital, and then you can have it's kind of like a joint venture where you have the owner of the project, which is a discoverer. It's not a big company, and then you have Elon provide the financial resources, and you can have an operator, right, like Vale and the BHP, that will provide the technical assistance to put it together. So it's also not unusual where you have an investor partner with an exploration company that made a discovery, and then partner with an operator that has the experience of putting a mine to production. That is actually quite a lot of the similar model that the Japanese deploy in a lot of the copper projects in Arizona and in Peru.
All right, cool. Well, that was a lot of knowledge, John. Thank you so much for taking the time to bring all this knowledge to us. I have learned a lot for sure. But if people want to, if people want to learn some more about you and Nickel and all your companies, where can people find you, John?
Yeah, I mean, you can look me up at Twitter. I'll give you my Twitter handle, but you just Google, or you go to Twitter and search for John Lee Battery Metals. And our company name is FLYN Nickel, FLY, nickel.com. And we're traded on the Toronto Ventures Exchange, FLYN. So there's a lot. If you want to learn about nickel mining, we have a lot of technical information for you to chew over. And I'm very glad we have this very informal exchange. Also, you can look me up at on YouTube. Just search John Lee FLYN Nickel. We've just started this social media awareness. For the purpose of bring the nickel awareness to the market. As I think different interviews focus on different aspects of the nickel market and nickel mining companies. But I really, really enjoyed this exchange because it focused on the supply and demand of nickel. So we have made a number of very, very bold prediction. I'm hoping that in the future, months and years to come, now will come on your program to see which ones we got right and which ones we were off. We were off by but it will definitely be very interesting to see in the future, and also how the likes of Volkswagen and the BYDs and the GMs and the Fords come to lighting, securing the nickel supply. And you will know very well, because soon as a contract is signed by GM, the mining company will not hesitate to get that news out in the market. And so we will know quite clear. And just by the virtue that not a mining company has come out and claim that credit, of having GM as an end user shows you that there's the emperor still hasn't shown whether there's clothes or not yet.
Yes, exactly. Well, thank you so much, John, for taking the time out of your busy schedule and talk with me on my little YouTube channel here. Thank you so much.
My pleasure.